Hi everyone, welcome back to Be Rich. I hope you're doing well. It is 2 o'clock in the afternoon as I'm recording this. And where's the market, Rupesh? The market is up. The Nifty Bank is up by almost 2%. And the Nifty index itself is up by 2%. While the rest of Asia seems to be in a negative trend. This is thanks to largely because India was on a holiday yesterday and we did not get any trading done. So we missed out the opportunity to have the bounce yesterday. So everyone is recovering from the bounce while India is having its bounce. Next week is even worse because we have Monday a holiday, like I said, and we also have Friday as a holiday. It's a very short week. Tuesday, Wednesday, Thursday. It will definitely leave a lot of investors wondering what they should do. Not long-term investors like you and me, but people who are doing this as for trading. It leaves the cat among the pigeon, as they say, because if the market is not open and Trump says something, you'll be unable to move your investments or do anything about it till the market opens. I can understand that. Gold has recovered today, and a lot of you are worried about gold. I spoke about it, saying don't worry about it, it will be fine. A lot of people do profit booking and positions. They take into consideration with the tariff and the sudden change in the headwinds. People need to cover their positions, so they liquidate gold. As Anand said in his video, one of the first things to liquidate when you're up against the wall is gold to take care of your shortfall. So, but now that is over. That cycle is over. Again, gold is trending upwards, and I don't see any reason for gold to go southwards as of now because things are in a stalemate between US and China. Yes, he has paused the tariffs on rest of the world, and he seems to be solely focused on China. Rest of the world, he's still at 10%. Remember, it's not completely off, but China is taken it to 145. And as I'm recording this video, the news just broke that China has decided to take it from 84 to 125%, which is even more crazy. It seems to be they're going toe to toe and there's no end in sight. This is what I meant. The world is changing and our views should change. And whatever we have been brought into believing the world to be is fundamentally changing. We used to talk for a very long time on this channel about how most of you grew up in this world where borrowing cost was near zero, especially in the US. And now we are in a world which is very different from you, where me and Anand know about it because we are much older. We came from the 1980s and the 90s, where we have seen high interest rates and we have lived through it. You guys are experiencing these high interest rates and you do not know what it is. Same way, we have rewound the clock now past World War II. So I would say a lot of us, I would venture to say, most of the world or all of the world has not seen this kind of world in their lifetime. So this is a very different world, and a lot of the things we have taken for granted in terms of wealth building, economics, and stock buying all go out the window, and you should be very careful. And each step we take forward should be thoughtful and well meant. And we should not be running around like headless chicken and trying to scalp everything which is available on the floor in the market. Because it's very hard to understand what the future is for you to think there's just blood on the street, so let me just go buy everything. That attitude is not good because you do not know if the blood on the street is being created because of your companies themselves are bleeding to death. One thing, if investors are bleeding to death and you grab the companies, but it's another thing if the companies themselves are bleeding to death. Should you be investing in these businesses is something to think about. The S&P 500, if you noticed, from closing on April 9th, it was up 10%. Then in April 10th, it was minus almost 4%. And this is true in the UK too. It was minus 3, then it was plus 3. Nikkei was minus 3, then it went plus 9. Today it's minus. Germany was minus 3, then it went plus 4. So India right now is in a positive territory. Probably by Tuesday, Indian markets might also start swinging negative again. The reason why I'm reading out all these global markets to you is to tell you the implications of what Trump is doing is global. It is not region specific. It is not stock or a sector specific. It is all sectors, all companies around the world are deeply affected by this whiplash trade policy which is unleashed upon us. The reaction seems to be unnerving at times and we really do not know what to do. And there are a lot of conspiracy theories like I was sharing on Instagram where people feel that maybe he's purposely doing this to the market, trying to corner the market, or he's probably shorting the market himself. I know it sounds ludicrous. I don't believe it. I don't think it's true. But then again, the world we live in, anything is possible. As far as the Fed is concerned, they don't seem to be doing anything right now. They're waiting and seeing what is happening. Inflation data in the US shows that the inflation has softened. It has come down considerably from the points it was at. So maybe markets can expect Fed to look at a rate cut and prevent a recession from coming on. I have really no clue what the Fed will do. Because the jobless data at the same time cannot be really relied upon because of all the layoffs which Dow just done, and what is going to become rolling from these tariffs is crazy. Those of you who have been following tariffs, and if you've been watching the news in the US, we have had small businesses owners after small business owners coming on media saying if these tariffs continue, they're going to be out of business, there are going to be more layoffs, they're going to be shutting business down. So the recession seems to be pretty much on the cards in the US. I know a lot of you have heard this word recession and you have not experienced a full-blown recession. And this won't just be an American recession, this will be a global recession. And trust me, it is not going to be pretty. Those 10 months, 12 months, usually that's how long a recession lasts, can be quite brutal. And be ready for so-called nuclear winter, as Bill Ackman said. The Indian market, of course, is a different kettle of fish. Today we open positive, but the impact on Indian companies in Indian stocks is very varied and muted depending on its exposure to the American market in terms of export. Of course, the IT sector and the pharma sector, which have always we've been saying is something great to consider because of the dollar arbitrage, where the rupee keeps getting weaker and they're exporting, and no matter what happens in the Indian economy, they're still exporting to the American economy, which is doing very well and is a robust economy, and profits will keep coming. Yes, that was all very true maybe 9 months ago. Currently, what's happening in the US with the recessions on the card, I really do not know if that kind of an arbitrage still holds as much water. That said, these companies are valuable. These companies will weather these storms. Some of these companies have weathered storms like this before, and I'm sure they will. They will get bruised along the way, and there will be months and years where it will not be sparkling as they were sparkling a few months ago, but eventually it will get through. But as an investor, you have to decide which is the entry point for you and how long do you want to wait to see that sparkle again. Because remember, as a famous saying goes, markets can remain far more irrational than you can remain solvent. Meaning that you may be waiting for the market to come back to a certain place to take your money out, and the market may decide to take a little longer, and your money requirement may be immediate. In terms of FIIs, there have been net sellers on April 7th, 8th, 9th. 10th was a holiday. Today also we'll have to wait and watch whether they're buyers or sellers. The DIIs have been net buyers on April, buying 12,000 crores, 3,000 crores, 2,000 crores respectively. And in the debt market, the FIs were selling on 7th. And on the derivative markets also on 7th they were buying, and on the 8th they were selling. So that is kind of curious, looking at the derivative markets, trying to see what kind of positions they're taking in the Indian market and what they feel the Indian economy might do. Because like how we look upon the American market as a hedge when we are sitting in India to diversify ourselves so we don't get all our eggs in one basket, the foreign institutional investors also look upon the Indian market as a hedge, considering what's happening globally and what's happening in the US, to invest here. So maybe they can also hedge against a downturn over there. If it's severe, maybe it's not severe here. So they also have these kinds of calculations as much as we do. As corporate earnings goes, TCS gave their announcements of their results, and main takeaway is that dividend is going to be 30 rupees per share, and they've pretty much said the landscape going forward is going to be very uncertain considering the macroeconomic conditions and the tariff landscape. So they're being very cautious. And I also hear within TCS itself, there might be more cuts, there may be more layoffs. So this is something we have to keep an eye on. And this might be not only from the tariffs, this also is going to be a roll-on effect from AI. AI is growing rapidly and more companies are adopting to it. And you can see many clips on social media. But be cautious out there. Many of these clips which are floating on social media about AI are all not true. Some of them are clickbait and they're just trying to stoke up an audience and to become viral. So this doesn't necessarily mean ChatGPT can solve everything and anything. As of now, it cannot. In future, God knows. But right now, do understand what is happening in AI before you decide to do anything. The Indian monetary policy, of course, the repo rate has been reduced thanks to all this happening, which means lending and borrowing becomes easier in India. But the economic data, industrial output, has showed the growth is at 5%, and the PPI data from Feb 2025, which is be released on today, that is, we'll have to wait and see what that is. I don't have the data with me in hand, but I'm sure once the data comes, if it's of any great significance, I'll share it with you. The Indian rupee, while was getting stronger against the dollar, it went all the way to 85, and now the dollar seems to be strengthening again, and again we're back at 86. This is dynamic, continues to be there, and we'll have to wait and watch to see what happens. Is the dollar going to strengthen? Is the dollar going to weaken? All depends on what countries like China, which are holding so much of US debt, what they decide to unleash upon the Americans in terms of their securities. If they decide to dump the bonds in the market, that is going to have a severe impact on the American currency. I know a lot of you think that China might do that, but the situation between China and US is there is no win-win situation. It's more like I lose, you lose situation. So though they may be doing this saber rattling as far as tariffs are concerned, eventually they will come to a point where they will come to some form of an agreement, because by holding so much of security, China really cannot go all out on US, because at the end of the day, the security they hold is American securities. At the same time, the Americans can't go all out on China, because most of the things they consume from China, they can't sit and make those things themselves. They can't set up a nail factory. They cannot keep setting up stuffed doll factories. Americans will not want millions of jobs sitting and making cell phones. They do make things in the US. They are the second largest manufacturer, like I said in another video, but they manufacture things where their returns are very high compared to these low-end products. So don't just listen to what the politicians are saying. There's more to this. If you are really interested, I would strongly suggest that you sit and read and deep dive and do some research to understand what the Americans make, what they export. They are exporters. It's not that they don't make anything in the US. It's just that they don't make things which you and me regularly consume across the table, like what we consume from China, but they do manufacture. In terms of opportunities in the market, keep an eye on price to earnings always. See whatever you're looking at, keep an eye on the price to earnings and see if there is value there. And you can even use the way I showed you the weekend, the video, how to calculate your own price to earnings. If you have some kind of idea on how the earnings are, and if it's something stable, you can look at that. Price to book, as far as finance companies are concerned, keep an eye on that. If the price to book is below 1, it is of value as long as everything else is sound. And also look at dividend yield. Dividend yield is a great way to look at a stock at this current situation. If the dividend yielding company is high and they promise dividends and they've been paying that regularly, that's also something you can consider. Then of course, look at debt and equity. In this current climate, any company with debt in it is not a good thing. Of course, you can use tools like Tickertape and Screener.in to identify these potential candidates. A lot of these data is presented there in a very nice way, so you can capture it and analyze it and understand it. Stock specific news in India, I would say be defensive in all your stock picks in India. That is, I would look at all. ITC is one of my favorite companies to look in India right now. Defensive sectors like utilities, consumer staples, healthcare are all great companies in US, India, and in Japan. Focus on companies that are domestically focused, that have a strong domestic presence, because a company which is able to stay within the American border and keep its market share is valuable right now because of the tariff scene. The same is true in India, the same is true in Japan. And companies which are leading in technology and innovation, especially in tech and semiconductors, are still very attractive, because this tariff thing will not last forever. Yes, it will do long-term damage. It will change the way we look at the economy and look at trade. But at the same time, innovation and technology is also doing the same thing in another way. So being invested in these technology and innovation companies, especially semiconductors, is valuable if you can hold on to it for some time. Do keep in mind, every single semiconductor company is not valuable. You have to do analysis and understand if the products these semiconductors making is of value, and is it adding to innovation, and is it looking forward and looking to the future. Also, businesses that diversify their supply chains, have some significant domestic production, can also waive off tariffs easier. Meaning, let's say that a company which has been importing, at the same time they have domestic factories in US or domestic factories in India or in Japan, then the tariffs does not lay on them very heavily because they'll switch to more domestic production, increasing domestic production while the tariff war is going on. This is the way I would suggest you should look at this going forward. In terms of companies, like I said, ITC, banks in India are always there, which is IDFC Bank, South Indian Bank, Karnataka Bank. These are things I would say you should consider in India. In US, you can look at Berkshire Hathaway and Google. In Japan right now, only thing which I'm looking at is Toyota. If you want more information on any of these things and you're interested, do reach out to me. I'm on multiple channels. You know all those channels where I'm available. I'll try and put you on to Albin himself if it's possible, and you can talk to the saint and get from the saint's mouth itself what God is speaking, who of course is Anand. Anyway, jokes aside, I hope you had a wonderful day and you're having a wonderful evening. Have a wonderful weekend. Do manage to rest and recharge. And I'll see you again on Monday. Monday is a holiday for us as far as the market is concerned. So trading day is only on Tuesday, but I'm sure all of us will get back to work. So I'll see you on Monday when your week starts. Other than that, I do have some weekend videos done for you guys, which should be of interest. Of course, it's not stock specific, more about investment and investment mindset. If it's something which you're interested in, do catch that video and let me know what you think. Once again, thank you for watching. Be rich and good night.